Hello and welcome to this episode of Akrinos Access. I'm your host, Eric Matei, joined today by Roxanne Arnal. Roxanne is the founder of C3 Wealth Advisors in Canada. So Roxanne, welcome from our friends north of the border. Welcome to Akrinos Access. Great to see you.
Thank you. Great seeing you again. We often refer to this as the Great White North, but this year it is not white, and we are not expecting a white Christmas. So it's very interesting. Very interesting.
Okay. Perhaps
Yeah.
another talk for another episode, a future episode. Roxanne, again, thank you so much for joining us on this episode of Akrinos Access. To our viewers out there, listeners out there, today's topic is about looking at your practice as a controllable investment. And Roxanne is not only an optometrist, but she's also launched into a career as a financial planner. She holds a CFP designation. And again, fascinating topic here that, well, Roxanne, I suppose kind of spurred some online conversation a few months back, and we thought we'd go live and record a conversation about it. So thank you again so much for joining us.
Yeah, thank you. Really, at C3 Wealth Advisors, we talk about wealth in many different forms. Sometimes people think, oh, that just means you're putting investments into the market. But at the end of the day, wealth comes in many forms, including our time and what we value close to us. But when we talk about the money side, really the biggest area that people have control over is their practice.
Yeah, absolutely. So let's go ahead and jump right into it, and maybe let's start just like talking a little bit about investments and different investment vehicles and, control or lack thereof associated with different investments.
Yeah. Often, like I said, when people think investments, they think entering the stock market per se. And what you're doing in the stock market is you're actually buying shares of publicly traded companies. So you're actually owning a small piece of that company. And part of our philosophy here is, do you know what you own and why you own it? So often if people are buying, blanket stocks, they are just buying companies. Some of them are really, really good companies. Some of them are not good companies, but they're just kind of throwing a bunch of darts at a dartboard and hoping some of them create a good return. Sure. They're not looking at, what's my buy-in price? Is that a reasonable buy-in price for that business? Because I know, and our clients aren't buying optometric practices at any multiple. They're not paying 312 times earnings. They're not going to pay that because that doesn't make sense. Yet people do that all the time when they're buying marketable securities, which kind of blows my mind because that's ridiculous. Why would you want to overpay for something? So that's kind of how most people think about investing.
Yeah, and I guess to kind of kick it off, to call it something that you mentioned there, the what and the why behind it. I think that's a fascinating kind of viewpoint when looking at wealth and looking at investments. And we're going to continue to kind of get into this, but to kind of start, I really like how you serve that up, kind of the what and the why. So where were you going with this? Continue down this path of talking about multiples and throwing money into the stock market.
Well, the easiest way to think about multiples is when we talk about a price to earnings ratio on anything. So your optometry practice, any business that's creating revenue, that would be the earnings. Your price to earnings multiple essentially at the end of the day is a way to describe how many years it's going to take you to pay for that business if the business doesn't grow before you get your basic money back. So if I'm paying 312 times price to earnings on a stock, it's going to take me 312 years to get my money back on that, assuming zero growth. That's, to me, ludicrous. Like, who's going to spend 312 years to get something back? Which is why most optometry practices are often trading in the single-digit multiples. We haven't seen in Canada double-digit multiples. So, and that makes sense, right? How many years are you going to plan to put into that business before you start earning your own revenue from it? right? That's that investable piece of buying into your practice.
Yeah, absolutely. And fascinating that you bring that up. I mean, certainly not a day goes by where we're not interacting with someone, and this is coming up, right? Talking about multiples, talking about EBITDA, right? Ways of measuring, these economic, these earnings basis measures and whatnot uh, to attempt to come around the value of the practice. But to put this in the context of how we're speaking of it here, Roxanne, I really like how you're bringing it up and really like starting to look at, okay, let's start looking at these investments and have the practice as one of these investments, but let's start to look at it a bit more objectively, right? Away from the day-to-day operations and look at it from standpoint of being an economic benefit generator, right? So let's now start to kind of unpack again a bit more. So we were talking about investment vehicles. We certainly have the stock market, right? Have the varying ways that is presented in mutual funds, index funds, individual
Yeah.
stocks, have you. We also have the practice. What else? I think before we went live, we are talking a little bit about real estate, and that was kind of interesting.
Yeah. When we talk about where you have control, so again, back to the stock market, there isn't a single one of us out there that have any control on how those publicly traded businesses are making or not making money. Elon Musk can put out a tweet that causes the stock market to react, but the rest of us can't do that.
Sure.
So we have no control over what those investments are ultimately going to do. In real estate, we sometimes think we have control. And again, I would caution people from overpaying for any piece of real estate. But at the end of the day, when you sell real estate, you're selling it for the value of what the next person's willing to buy it for, as is trading on the general stock market. And you're really not necessarily buying a growing asset in real estate. We all like to think we are, but I'm sure in the States, as here in Canada, there are some market areas where housing and land was selling at ridiculous values, particularly pre-COVID.
Sure.
Those values have come down, and now as we're getting, economic constriction, those values are still coming down. So it is quite possible that you are what we refer to as upside down on your real estate, where you actually owe more than that piece of real estate is worth. So the assumption that you have control over your piece of real estate on it generating revenue for you is false.
Sure. So then further down the line, and by the way, let's perhaps also look at this in the context of, we're talking about real estate, also perhaps usage of the real estate, right? Which is a variety of different ways, and I know we've got perhaps a total other topic for another time, Roxanne, but talking about the investment potential of real estate. But I think the key takeaway here for everyone is that real estate, just like the stock market, to what degree do you have any bearing or level of control over what that might be, right? Still, very much of this is based on pure speculation.
Yeah.
Yeah. So that then leads us on down this path of what's next when we're talking investments.
Yeah. At the end of the day, buying a practice is something you have control over. Just like Eric, you own your business, I own my business. We have control over how these businesses are investments for us and how they're going to grow. Right? The decisions we make, markups on products, how we value our services, how we're advertising to grow, like those are all going to have direct impacts on how we can grow this investment of owning a business.
And in so doing, then let's now start to shift gears. And once again, it really is such a cool topic when we consider how much of what we own, what we're invested in, how much of it truly is speculation. I mean, sure, we can do a lot of research and a lot of asking around and listening to the news wire and such, but still, the degree to which we can have any bearing of control over that, you're right, we absolutely can't. Whereas in the practice, I mean, sure, there's risk associated with practice ownership, but as we've touched on prior, and actually I know I've touched on in other segments of Akrinos Access, where we're talking about the degree to which, private practice optometry, private practice eye care is very low risk, right? And we know this. Why? Well, banks are still lining up to help people open practices. I mean, just the default rate is minimal. And for a variety of different reasons, right? But nonetheless, if we're looking at it from a standpoint of an investment in the risk, far less risk with that practice, but also that level of control is through the roof. And I think it's also important, Roxanne, that we point out how we're measuring these as well, right? As it pertains to an investment vehicle, or an income generating vehicle, as well as, kind of something that's more going to grow in that value as the practice and the goodwill of the practice grows. So let's maybe touch a little bit on measuring returns. And I know we were having a conversation before we're going live here. We're talking about some pretty sophisticated algorithms, and I asked Roxanne that we not go too deep into the trenches on that stuff, but definitely fascinating stuff. So Roxanne, why don't we talk a little about that? So, we're looking at a portfolio, and maybe let's look at a portfolio where we've got some mutual funds, we've got some individual stocks, we have some real estate, we have our practice over here. Let's maybe just touch on how we would come to value and gauge some sort of ROI in each of those lanes.
Oh, I don't know if you can still. My internet has run into an issue. Oh, are we good?
I was going to say we had a glitch right there, but here you're back.
Hello?
You're back. Yep, gotcha.
We're good? Okay, because I can't
Yes.
seem to keep us back. There we go. I'm hoping this works. So
Gotcha,
essentially
loud
what
and
we're
clear.
talking about is return on investment. So perfect. So when we're talking return on investment into the plan, the return is what you're getting out of that plan. So whether it's a mutual fund or your practice, for the money you're
Yeah.
putting in, how much are you generating? Where are you winning? Including winning from an after-tax perspective, right? So tax is kind of a beast, and we need to take that into consideration. Inside your practice, you also have the ability to measure that return on investment from what I call advertising or marketing campaigns. Super critical, you know? There's no point doing a 2-for-1 sale if we're never going to measure if it's got any impact. And if the impact of it generates zero profit, that is not a good return on investment.
Certainly.
So we do see some multiple deals here in Canada. There was one optical for a while. They were advertising 3-for-1. They haven't stayed in the market because that's not profitable.
Sure. Yeah.
Yeah.
But it's interesting what you said there. And by the way, for our viewers, to put this in context, I don't think Roxanne is saying, "Hey, jump on a 2-for-1 or a 3-for-1 train or anything." But I think what you're pointing out is that, again, it's a controllable investment, right? So if you can say, okay, we're gonna launch this as a strategy in. By the way, at time of recording, we're near year end of 23. So let's say you're looking at the year ahead, the next calendar year. Hey, let's make this a big priority and put some dollars into it. Measure the results, right? Because if you can invest, and I know we talk about it all the time with equipment, right? Adding scope of care, adding some specialty equipment to the practice. Hey, how's it going to generate that ROI? Well, you gotta monitor it to see if it works. A critical piece there, but also the degree to which you can throw dollars into the practice and garner a pretty radical return if you've done the proper analysis, developed a cohesive strategy, and really implemented it, right? Whereas you can't do that with mutual funds, individual stocks, real estate, and what have you. So let's talk a little bit more. Also, you mentioned something about the tax piece. And I think that's sometimes overlooked when we're talking about investing in whatnot. So why don't we talk a little bit about share with our listeners a little bit just about tax treatment and tax treatment of different investments.
Yeah, so up here in Canada, we use some slightly different terms, but essentially, where we're talking about registered accounts versus non-registered accounts, they're all going to be taxed slightly different. So I believe the Roth IRA is equivalent to our tax-free savings account, where the growth inside that account is tax-free, but that has to be a personal account. Do I've got the right analogy there?
We're not even going to go into those waters because there's different tax benefits as far as
Oh,
when you're getting
okay.
the tax benefit, when you're putting in and when you're taking out.
Perfect.
But I think the key piece here, and again, Roxanne, this is so cool that we're doing this like continentally on this Akrinos Access. But on this topic of tax treatment, no matter where you are, in the States and Canada, perhaps you're listening in from another part of the globe altogether, right? But just understand the tax treatment of the different investment vehicles. And it's imperative that you include that in your analysis and your planning. I think that's the takeaway, right? Is that
Yeah.
you're including any sort of tax benefit or tax liability in these plans as you're putting them together. So let's talk a little bit then, shift gears. And again, we're talking about looking at your practice as a controllable asset. Maybe talk a little bit about how this would impact things at different stages of the practice life cycle, right? From someone perhaps earlier, just starting out, to someone kind of in the core growth years. And then also for those that are eyeing the next step in a transition. Let's talk a little bit about the practice as a controllable investment at different points of the practice life cycle.
Yeah, I'm very much a believer in a coaching from, how can I make my practice more profitable? So that I think is in part where we had a good connection, Eric. I find too that practices that engage in coaching to the point that they actually listen to the coach and make those changes, they are by far the most profitable. So why would we not invest in that type of assistance? That always shocks me. Because we know that those practices are far more profitable. And then from a cold start perspective, it really is about making sure you're getting your name out there, your advertising. People start to recognize your name. In our small town, when although I bought an existing practice, we went to every little event in this town so that our faces could start getting recognized. Right? Who are you? This is a small enough town that people would recognize there's a new person here. Let's talk to them. Who are they? Right? And that's quite inexpensive. Right? So get yourself known, talk about what it is you do, and talk about the passion as to why you do it. Why should people come and see you? What makes you different? Right? We've all been to medical doctors where we feel very comfortable and can share with them in a much more open fashion. And some medical doctors don't make us feel that way. Right? So we're not always going to connect with every patient, but it's really key to find those patients that we enjoy spending time with, but who really connect with us. So we can bring them a value that's, far beyond what they're going to get somewhere else.
And for someone early in practice ownership, right? Whether recently cold started or purchasing or recently purchased a practice, absolutely looking at the practice as a controllable asset or a controllable investment, right? What can you do to be visible, to garner interest, garner cash flow, attract cash flow to that investment? It's fascinating. Once again, you can't do it with any other investments out there. Let's now maybe take it forward to folks that are looking in perhaps during that growth phase and beyond, looking at the
Yeah.
practice as a controllable investment.
The key to
Elaborate on that.
remember, I think, as we grow, and sometimes people forget or government payments kind of beat us down a little bit, but have you done enough analysis to know that what you're charging for your professional time has the appropriate Markup isn't quite the right word, but has that appropriate increase over time. So don't get stuck at the same, oh, we just haven't raised our fees in 5 years, because that's ridiculous. All you have to do is go to the grocery store and things are way more expensive than they were 2 years ago.
Yeah, sure.
Or you're having to pay your staff more. So as you're increasing your expenses in that practice, if you haven't increased your revenue, you are shrinking that investment. So pay attention to those things. Pay attention to your dispensing markups. Pay attention to effective handoffs, right? We always talk about measuring the success in your practice. How many patients are you retaining on the sales side? Because whether we like it or not, the dispensing aspect of a practice still generates a great deal of the revenue for a practice.
Yeah, absolutely. We could go, and certainly that gets into very much the world of our world when Akrinos, right? And working with practices that are in this growth phase, looking to achieve that next phase of growth. A lot of it ties back to systems, right? Systems, operational systems that can be put in place that are optimized to the practice, that are proven, and the results show can garner those sustainable results. So love what you were mentioning there as far as continuing to be engaged in the practice and be strategic about these decisions, right? I mean, realizing things, it could be everything from simply pricing. When was the last time you updated your pricing and adapted that, all the way through to adding to scope of care? And I know a lot of fascinating topics going on right now in modern optometry, both in Canada and absolutely here, very much so
Absolutely.
in the US as well. And to that end, considering all of these incredible ways now that modern doctors of optometry can meet that growing demand for vision, for medical, for specialty eye care. And there's a lot of ways to invest in the practice in a way that, well, you can't invest in any other investments out there, and the degree to which you can impact those results. So Roxanne, this has been a really great conversation. Before we wrap up, why don't you please share with us a little bit more about yourself and the work you do at C3 Wealth Advisors, and how folks can get in touch.
Yeah, thanks. I was an optometrist. I still get to call myself, I guess, an optometrist, but I'm not licensed anymore. I've gone through the phases of being an associate, buying into a practice, forming a partnership, and ultimately exiting the practice. So I've got experience across many different aspects of the lifespan of the average optometrist. And then having that discussion as to, okay, are we creating something that's going to grow with us? What are the impacts if I'm buying a business? How will those loan payments impact my personal cash flow? What do those things look like? So we crunch those kinds of numbers. Preparing to sell your practice. Have we, in Canada, we use the term purified your corporation so that you can still qualify for some special tax benefits there? So do we have it set up correctly? Do we need to even go in and make your practice pretty enough that somebody actually wants to buy it? Sometimes it's time to put a fresh coat of paint on that wall because that 1980s teal is just not going to cut it, right? And we do know that the modern optometrist want practices that have all the state-of-the-art equipment. I explain to my clients who are looking into that sales side, that's a given. And if you don't have those things, they're going to look at your practice quickly and go, oh, like, that's not even a practice worth buying. That is a given. They expect you to have the basics and keeping your office up to date. Like an OCT is no longer an add-on, right? That's a basic piece of equipment that our modern optometrists expect your office to have. So do we need to start preparing? So I often work with clients who are, what I say, within that 5 years to when they want to sell their practice, because that gives us time to put all those things in place. Optometrists are busy, and if you're seeing patients versus running in a strictly managerial aspect in your practice, you need time to implement on top of seeing your patients. Those things take time. And then we work moving past that. What is your new income stream going to look like when you no longer own a practice, right? What buckets can you take money from to manage that tax bill moving forward, to ensure that we've got options and opportunities if something comes up. We want to take our family for an around the world cruise and it's going to cost us a couple $100,000. What bucket can we pull from? Like, let's talk about those things so you can actually enjoy the wealth that you spent so much of your life growing, that controllable asset.
Love it. Love it. And Roxanne, how can folks get in touch with you?
Yeah, so I am both on the website and through LinkedIn. Those are probably the key and easiest ways to get a hold of me. Obviously, our email and contact us on the website kind of takes you there. I do know that if you're not careful looking up C3 Wealth Advisors, you can get a horrible copycat. So do be careful with that. Our logo has a beautiful leaf on it that kind of illustrates a growing investment, and also taking you from the blurry world outside that leaf, bringing you into that leaf to provide clarity. Because without clarity, where are you going with your wealth planning?
Love it. Love it. And that's going to be over at c3wealthadvisors.ca. Roxanne, I know you also frequent LinkedIn, so folks can connect with you there.
Yeah, and LinkedIn, I do have a business account, although quite frankly, most of my followers are on my personal account. I think that's how most of us connect on LinkedIn, because quite frankly, LinkedIn is that person to person as opposed to business, in my perception anyways.
Yeah. Well, Roxanne Arnal, C3 Wealth Advisors, thank you so much for joining us all the way from Canada on this episode of Akrinos Access, where we were talking about looking at your practice as a controllable investment. So again, you can connect with Roxanne and learn more about the great things she does at C3 Wealth Advisors over at c3wealthadvisors.ca. And for everyone out there, we hope you found this episode of Akrinos Access valuable. Be sure to subscribe to the Akrinos YouTube channel and head on over to akrinos.com. No matter what that next phase of your career you're in, that phase, that next milestone in practice ownership, whether you're cold starting, purchasing, or looking to grow and plan that exit, head on over to akrinos.com, find some more great tools, and see all the cool ways we can help you on that next phase of your journey. So, Roxanne, thank you again for joining us.
Thank you.
Access.
Great. Have a wonderful end of year holiday season.
That's it.